Hello, and welcome back to the channel. I'm Algabot, and today we're taking a close, educational look at an expert advisor for MetaTrader 5 called the Hurst Regime Channel Breakout. This is a breakout strategy with a distinctive twist. Before it acts on any channel break, it first measures whether the market is genuinely trending, using a statistic called the Hurst exponent. Over the next few minutes, you'll learn how the strategy reads market persistence, how it defines its breakout levels with a Donchian channel, and how it manages risk with the average true range. Everything here is for education only, so let's get started. So what exactly does the Hurst Regime Channel Breakout do? At its heart, this expert advisor is a Donchian channel breakout system. It watches the highest high and the lowest low of a recent window of candles, and it looks for price to close beyond that range. A close above the recent highs is a potential long. A close below the recent lows is a potential short. Those rules are clean and symmetric. But here is what makes this approach different. Most channel breakouts struggle for one simple reason. Markets spend a great deal of time drifting sideways, and in those conditions, almost every push past the range snaps right back. This strategy tries to sidestep that problem by adding a regime filter built from the Hurst exponent. The Hurst exponent is a statistic that estimates whether recent price movement is persistent and trending, or whether it is mean reverting and choppy. A reading above 0.5 suggests persistence. A reading below 0.5 suggests mean reversion. And a reading right around 0.5 looks like a random walk, with no clear edge. The strategy only acts on a breakout when the Hurst exponent is high enough to suggest the market is genuinely trending. In every other case, it simply waits. Risk is handled with the average true range, which sets both the stop-loss distance and the take-profit distance so they adapt to current volatility. Because it runs on whatever time frame the chart is set to, it can be studied across many symbols and many time frames. It is best suited to traders who are curious about combining classical breakout logic with a statistical measure of market character. Remember, this is an educational walkthrough, not financial advice, and trading always involves the risk of loss. Let's walk through the logic step by step. The strategy works on completed candles. On every new bar, it looks back at the candle that just finished and treats that as the breakout candidate. This keeps decisions clean and avoids reacting to a candle that is still forming. Before it does anything, it checks that there is enough history for its calculations and that there is no existing position for its magic number. It holds only one position at a time. The first real step is the regime gate. The strategy takes the last 128 log returns and estimates the Hurst exponent using multi-scale rescaled-range analysis. In plain terms, it slices the return series into chunks of different sizes, measures how the range of those chunks grows as the chunks get larger, and fits a slope to that growth. That slope is the Hurst estimate. If the estimate is below the threshold of 0.55, the strategy concludes the market is not persistent enough, and it stands aside. No breakout is taken. If the Hurst reading passes the gate, the strategy then builds a Donchian channel over the prior 20 bars, deliberately excluding the breakout candle itself. It records the highest high and the lowest low of that window. Now it checks the close of the just completed candle. If that close is above the channel high, the setup is a long. If that close is below the channel low, the setup is a short. If price closed inside the channel, nothing happens. When a valid breakout survives the regime gate, the strategy sizes the risk using the average true range over 14 bars. For a long, it enters at the ask, places the stop-loss 2 times the average true range below entry, and sets the take-profit 3 times the average true range above entry. For a short, the logic mirrors exactly. It enters at the bid, places the stop above entry, and sets the target below. That gives a reward roughly 1.5 times the risk on each attempt. Position size is a fixed lot, and that is the full cycle. Measure the regime, confirm the breakout, then define risk and target. Let's read the actual MetaTrader code the expert advisor runs. At the top are the input parameters you can adjust. Hurst window is set to 128, the number of returns fed into the regime estimator. Hurst threshold is 0.55. The persistence level of breakout must clear. Channel period is 20, the Donchian lookback. AtrPeriod is 14, and the two multipliers, 2 and 3, scale the stop and the target. Lots is the fixed position size. Now look at the signal block. The first line is the gate. If the Hurst reading is below the threshold, the function simply returns, and no trade is considered. If it passes, the code reads the close of the just completed candle. It sets cross up to true when that close is above the channel high, and cross down to true when the close is below the channel low. If neither is true, it returns. Below that are the two entry branches. In the long branch, the code takes the ask price, places the stop loss 2 times the average true range below entry, sets the take profit 3 times the average true range above entry, and calls trade.buy. The short branch mirrors it exactly. It takes the bid price, places the stop above entry, sets the target below, and calls trade.sell. Both sides share the same volatility-based risk logic, just flipped in direction. That symmetry is the heart of the strategy. Let's walk through this illustration candle by candle. On the price chart, you can see the Donchian channel drawn as 2 blue lines, a channel high and a channel low that trace the recent range. Below the price, in the subpanel, is the Hurst exponent, our regime measure, with a red dash threshold at 0.55 and a gray dashed line at 0.5, which marks a random walk. Look at the first several candles on the left. Price is drifting sideways in a tight band, bounded above by the channel high and below by the channel low. Notice the Hurst line down in the subpanel. In this early stretch, it sits near or just below 0.5, telling the strategy that movement here is closer to a random walk. Even if price nudged the edge of the channel, the regime gate would keep the strategy on the sidelines. This is exactly the choppy environment the design wants to avoid. Now watch the Hurst line climb. By the 5th candle, it has pushed up above the threshold of 0.55 and into the green persistent zone. At that same moment, price closes firmly above the channel high. Both conditions line up. The regime is trending, and the breakout is confirmed. That is where the buy entry marker appears. The strategy enters long, places its stop loss below entry at 2 times the average true range, and sets its take profit above at 3 times the average true range. Follow the next 2 candles. Price extends higher with strong, persistent momentum, exactly the follow-through the Hurst filter was screening for. By the 7th candle, price reaches the take profit target, and the long trade closes at its objective. Notice how the reward captured is about 1.5 times the distance that was risked. After that, the character of the market shifts. Price stalls near the highs, then begins to roll over. Through the 9th, 10th, and 11th candles, it steps down, and the channel low begins to fall with it. Meanwhile, the Hurst line stays comfortably above the threshold, so the trending regime is still in force. The stage is set for a move in the opposite direction. Now watch the 12th candle. Price closes below the channel low, breaking beneath the recent range while the Hurst exponent remains in the persistent zone. That is the sell entry marker. The strategy enters short, places its stop loss above entry, and sets its take profit below, using the same average true range distances, just mirrored. Follow the final candles. Price slides lower with steady momentum and reaches the take profit target on the 14th candle, closing the short at its objective. Across both trades, the pattern is identical in spirit. The regime filter first confirms the market is genuinely trending, the channel break confirms direction, and the average true range defines both the risk and the target. This is educational information only, and remember, not every breakout follows through. Some reach the stop instead, which is why risk is defined before every entry. And that brings us to the end of our look at the Hurst Regime Channel Breakout. Today we covered how the strategy estimates the Hurst exponent to judge whether the market is trending or choppy, how it builds a Donchian channel to define its breakout levels, and how it uses the average true range to set both its stop loss and its take profit on the long and the short side. The core idea is simple but thoughtful. Confirm the regime first, then act on the breakout. If you found this educational walkthrough helpful, please consider liking the video, subscribing for more MetaTrader 5 strategy analyses, and leaving a comment with the strategy you would like explored next. You can find more at www.algobot.live. Everything here is educational content only and not financial advice. Past performance does not guarantee future results. Trade responsibly.